Good morning and very warm welcome to all of you after the long weekend to Almus Market Mornings, your daily dose of financial updates. I'm Shikhar Garg, your host, and I hope that you guys are well rested and ready, just like us, as we head to another round of turbulence in the financial markets. In today's list of bad weather turbulence, we have Russia-Ukraine issue, which is persistent enough to make nations raise their defense budgets. On the other hand, inflation has likely pushed most of the economies in a tightening phase as against the previous stimulating stance that we were observing. On the list is another point of concern, the constant high oil and other commodity prices, which has been the primary drivers of inflation. So, Jairam, there's a lot of things that we've been observing and we have to continue to observe. What do you think of financial markets lately and what should we be looking out for?
Okay, so let's look at what happened in this long gap that we had. Equities in the global markets swung both ways with underlying weakening bias. Record PPI in US, multi-decade high in CPI in UK, stillness in P stocks, and mixed corporate earnings. They were the factors that investors were looking at. So that actually saw the market swing up a day and then give back all the gains on Thursday ahead of the Easter weekend. The other big thing that happened was the ECB meeting, where there was no change in policy rates as widely expected. However, the bond buying would end in third quarter. Lagarde, the ECB president, is still non-committal on rate hikes and saying that Europe is to be viewed differently from US because we have the impact of Ukraine war on our economy. Although market expects 2 rate hikes this year, probabilities have been reduced. Interestingly, one ECB member has called for a 50 basis point hike in July. But with all the slow approach to the inflation problem in Europe, Euro is taking the brunt and it has hit a new 2-year low at 1.0758 on Thursday. On the Asian side also, there's not been much of a good news. The cases in Shanghai are still increasing and a large part of the population in China have been locked out. In the meantime, People's Bank of China reduced the reserve requirement ratio by 25 basis points, but less than what the economists had forecast for 50 basis points. The interest rates have been kept unchanged, but the modest reaction indicates that the central bank is looking at interest rate hikes in the US and perhaps the rising inflation risks, which is keeping them, on a slow approach. Oil prices, of course, have once again jumped. Brent, which saw 97.57 last week, is now more than 11% higher at 111.70. One of the triggers being Russian President Vladimir Putin saying that on and off peace talks with Ukraine had actually hit dead end. So that's about the global markets. Of course, we also had New Zealand and Canada raise their policy rates by 0.5%. But amid an atmosphere of strong dollar, these currencies actually have weakened post those decisions. Rupee, of course, has been in a gradual move lower in tandem with other currencies, but the move is definitely slowed down because of RBI's constant presence. For the week ended 8th April, again, RBI reserves came down by another 2.4 billion, confirming their selling operations in the market, apart from some valuation effects. CPI at 6.95 has actually been perceived that RBI is further down behind the curve. And oil renewed rally and dollar index up move, these are the factors that will support USD INR. And we will have to watch out what RBI does in this coming session. Just to remind you that the market will start in another 15 minutes. The bank forex desks will be open. The implication is that corporates can hedge right from the open. There can be more up and down volatility in the market, and flows can be seen right from the start, particularly from the offshore markets. That's the implication. and we'll see how the extended hours help the corporates. And other point is that most of Europe is closed today because of Easter Monday. So that will also be lowering the volatility during the latter part of the day. In the Asian hours also, we have not seen much of a movement despite some key data from China about GDP, retail sales, and industrial production. GDP, of course, came better than expected. Industrial production and retail sales were lower. So that's it. We start with a very quiet day, but action should pick up the way markets are. Yields, interest rates, inflation, oil, all these things do not give room for any complacency or resting by the traders and the corporates. Thank you. Have a nice week.
All right, so it's 8:47, guys, and 9 a.m. we begin with our market operations as there has been a change in timing by RBI. So let's brace for an extended trading period as well. And as the commentary went, we see China is one of the outliers as the PBC is on the continuous stimulating side where they reduce the reserve requirement. But otherwise, all the other central banks have been seeing tightening. The on and off peace talks, which was brought to a dead end as per Vladimir Putin, has shot up a lot of triggers as well as oil, you mentioned. But we see there is good intervention by our central bank, and even though they are seen behind the curve, it needs to be seen how do they manage the inflation. So let's brace ourselves for a good risk management in the coming days. Till then, we bid adieu. Goodbye. Thank you, guys.
Shikhar, before you close, just to update you, pre-market is showing USD INR trading around 76.35, which is about 15 to 18 paisa higher than where we closed on Wednesday.
Yeah. Oh, so we are going to, it is likely that we are going to open higher than what we saw before we closed for the long weekend, guys. It's good to start managing our risk. That's it for today.